The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Monday, the 16th of November 2020. On the podcast today, Harvey Sinclair, CEO of E-Energy, talks about their largest ever single contract signed to date. Also on the podcast, John Quinlan, CEO of Iconic Labs, talks about their new management contract with Loving Media and their recent placing and financing update. Also, Alan Green, CEO of Brand Communications, talks about Venture Life Group, RA International, Arkle Resources, and as always, at the end of the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most liked RNSs too. By the way, you can see both these lists, top 10 visions of these lists at voxmarkets.co.uk, where you'll see lots of other content and our COVID-19 index, which has taken a bit of a hit today because, of course, who is it? We've got Moderna coming out. Exactly the same tech as Pfizer. mRNA technology there, but they've announced their efficacy rate is 94.5%. So some companies are taking a hit on that. Biggest fall of the day is Synergen, down 13.33% at 104, because of course they have a COVID vaccine there. Biggest riser today on the list, it was dropping down, a lot of trading here going on. Omega Diagnostics, up now 6.25% to 59.5. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app. And
joining me on the podcast right now is Harvey Sinclair, CEO of E-Energy. Ticker there is EAAS. Harvey, thanks for joining me.
Good morning.
Well, that's what shareholders want. Monday morning, new contract win, and it's the largest ever single contract you've announced. That's good news, isn't it?
It's fantastic. We're thrilled to bits. Yes, yeah. It just shows the momentum we're making at the moment.
Yeah, well, listen, before we get into the detail of that, if there's someone listening out there and has never heard of E-Energy, could you just summarise what you're about, please, Harvey?
Sure. So E-Energy is an energy as a service business. Our core company, eLight, provides light as a service for our corporate customers, education and commercial businesses, allowing them to move to LED lighting for a subscription fee, and therefore able to unlock cash flow from their old infrastructure. We're doing extremely well.
Yeah, absolutely. Well, let's dig into this then. So it's a single, largest ever single contract you announced. Take us through how much it is and who it's with, etc. If you could, Harvey.
Yeah, so as you know, we've been building out our multi-academy trust business over the last 12 months, and the contract win is with an academy trust which has 4 schools. The contract value is £1 million. It has been the result of a lot of the work we've been doing since the beginning of Q1, and we're expecting to be able to deliver that fully installed and therefore revenue recognised by the end of December.
Yeah, and you're doing very well here. Even here, you've announced, you continue to expect the group to achieve break-even profit after tax for the 6 months ended 31st of December. So how is Q2 doing for you?
Well, look, it's on track. We're extremely confident that we can make our group operating profit by the end of December, which is obviously a massive turning point for us, having invested so heavily over the last 2 years in this business. And, more importantly, I think what's underpinning that is just this massive tipping point of new business. So we are really seeing a major transformation in the volume of proposals that we are producing for customers. To give you an example, in Q1 in the UK, we delivered about £3 million worth of proposals to our education customers. That's about 30 proposals. We're on track to do 70 in Q2. And what that enables us to get some visibility on what Q3 looks like for next year. So we work on a 3 to 4 month sales cycle. So given that we are consistently closing around 30% of our proposals, it's just giving us massive confidence in the trajectory this business is on. and we're actually seeing huge traction outside of education in the multi-site corporate customers we're working on as well. So yeah, really positive trends we're seeing in the market. Absolutely no impact of lockdown. Schools are engaging, massively driven by the government's incentivization plans at the moment. Yeah, look, we're really excited about the prospects for the company.
Yeah, sounds like you're motoring along. And so you will give 3 reasons then. But as always, Harvey, I have a list on the front page there, Vox Markets, a list of 10 companies, the most followed. To get on that list, several people have to hit that follow button. So give them 3 reasons if they're not following you right now, why they should hit that follow button and add eEnergy to their watch list, please.
Sure. I guess the first reason is, look, eEnergy is now the leading light as a service provider in the UK for education. Traction is up 500% year on year. We're a climate action business looking to really genuinely offer climate action strategies for our customers. We have a very developed M&A plan, and we're hoping that over the coming months we'll be able to secure our first major acquisition.
Excellent stuff. Harvey, good to chat to you as always. And like I say, lots of news coming up, so no doubt we'll be chatting again in the not too distant future. Thanks very much.
Thanks, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is John Quinlan, CEO of Iconic Labs. ICON is ticker there. John, thanks for joining me.
Hi, Justin.
Now, you've got a new management contract out with Lovin Media. We'll talk about that and some other things regarding funding update of late and a placing you've done. Before we get into all that, John, for people who've never heard of Iconic Labs, can you just give a quick summary as to what it's about, please?
Sure. Yeah, so Iconic Labs is a media and technology company. We own and operate various digital media brands and look to monetize them through different ways, including sponsorships, programmatic advertising, and other revenue sources like e-commerce.
Excellent stuff. Okay, well, let's the news today, new management contract via Lovin Media. Can you take us through this and what it's worth to you and why it's significant in any way?
Yeah, no, I think it's worth a lot to us. So I think we've been looking at Lovin for probably about 2 or 3 years before we were even working in Iconic. So we've known about them for a long time. It's always been a business that works quite well with our model. They've got a lot of strengths. They've been around a long time. They've got a distinct brand. They do a lot of entertainment and lifestyle content on sort of like the things to do in Dublin or things to do in Ireland. And they actually moved to being a general media brand as well. And their strengths complement ours. They've got a lot of social media followers, which again we know how to monetize. So we'll be looking to see what we can do to add value there. And they're very complementary to the business we did in the summer with Joe Media via Greencastle. So we think there's a lot of synergies there about how they can work together. Very basically selling. Maybe using the same sales team to sell both, for example. So and try and make some more revenue that way. Yeah. So we're hopeful that 2 + 2 = more than 4 on that one.
Yeah, exactly. And financially, what's the deal here? How much are you getting paid for this?
So we're getting £10,000 a month. But I think the key thing for us is the profit share.
Yeah.
We back ourselves to make things work, and we get rewarded for it. And the deal that we've done, the structure that we've done with Greencastle is we're not putting up any capital for this. We're not loaning any money. It's a simple, straight service deal for us. And we believe we've got the capabilities to make that 25% worth a lot. We don't have any doubts that when you add in our skill set and combine it with Joe and her media, you get some natural synergies and some natural uplift anyway. But I think from our point of view, we're very incentivized to work hard on that to make sure that we properly monetize it.
Yeah. And this is obviously not the first contract via Greencastle. So how much, you sort of, I know you've announced it in RNSs, but totting it all up, how much have you announced so far then will be, recurring on a monthly basis from via Greencastle?
Yeah, so, I mean, again, it has been announced in RNSs, but no harm to go over it again. So I think we've announced the TLE, the London Economic Management contract, which is 10,000 a month. We've announced this one, which is 10,000 a month. And then we announced a sort of a bigger one, and then that bigger one increased from 50 to 100. So in management contracts, as a sort of base level, without any profit share, we're 120,000 a month.
Yeah, wow. And so the share price is a bit volatile, as you said previously, but now you've had this new funding arrangement together with the placing there. Can you explain the difference between this and the previous one, and why you think it'll help in some way?
Sure, yeah. So, the key thing is that the previous facility had a convertible element to it, and that was something that we had been. We understand why companies have to take those, and indeed Wide Cells, the previous incarnation of Iconic, had to take it, but it was never something that was our optimal strategy, shall we say. So we've been looking to move away from it for a long time. And then when you've got the underlying business, both in terms of the revenues and in terms of the, let's call it the strategy coming together, we were able to get people to buy into the vision and actually invest equity. And invest equity alongside a non-convertible debt line that we can draw on if we need it. Yeah. And so the difference is very, very clear. Previously there was a chance that that there would be a lot of convertible shares hitting the market, and now we have stopped those share issuances.
Yeah. Because obviously, previously, you announced some news, the share price rise, and you get conversion of the shares selling at the market, the big overhang, and the share price never seemed to make any headway. So now you're hoping, without that overhang, the share price can make a bit of progress. Is that right?
Well, that's certainly the plan. Look, I think we're a bit of we've been working away, as you can see by look at the revenue numbers. We've been working away in the background for some time, and we've been kind of like frustrated at the share price. And look, that's fair enough. We understand people's frustrations because we were frustrated ourselves. I think we've said we were going to do something. We said we were going to replace that facility. We now have gone and replaced that facility. So I think that we are looking that this is a sort of onwards and upwards scenario where we've done quite a lot. We're not short of activity. Iconic doesn't, we're not shy about putting out some news. But I think that previously, perhaps you're right, as the model you described there has happened a lot, which is stuff comes out, does well, then lots of shares hit the market, and it sort of takes the shine off it. So we're hopeful that this means that whenever we do now put out good news, then everyone gets rewarded for that. So that's the way it should be.
Yeah, marvellous stuff. Okay, John, as always, every day on the podcast, I highlight the top 5 most followed companies on Vox Markets. To get on that list, people have to hit that follow button on your page. So give them 3 reasons why they should hit that follow button and add Iconic Labs to their watch list, please.
Sure. So I think the first thing is we just said there, which is, conversion shares from a convertible facility. That's no longer happening. So we should get we should make the progress that we all deserve. I think we do deals like Lovin, like Joe and Her, like TLE that make a big difference and contribute to ourselves. And then I think I haven't really mentioned it, but the underlying model of this company and the vision is working. We've got people to buy into it. When we have been working on Joe, on TLE, we've increased programmatic revenue on Joe by 300%. We've increased programmatic revenue on Joe by 200%. We've got a number of big deals in. So I think our underlying business is working very well, and now I'm hopeful combining that with the new funding. As I said, it's a very positive future for the company.
Excellent stuff. John, good to chat to you, and hopefully we'll catch up in the not too distant future. Thanks very much.
Brilliant, thank you.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Alan Green, CEO of Brand Communications. You all right, Al?
I'm very good, Just. How are you, sir?
All right, just about recovering from the wet weekend. It's like, God, unbelievable. You know, what's going on with the weather here? Part of me wants to move abroad. I've got two young sons,
God, yeah.
and they're in schooling. If they're at an age where they could, if they're in university or something, I'd probably just, live abroad for 3 months, I think, as sunnier climes, because it gets me down, this weather. It's dark and rainy. It's horrible, isn't it?
Well, we had the most astonishing experience yesterday. Yesterday afternoon, we drove from Seaford to my son's new house in Southwick, which is just west of Brighton, and we're driving on the coast road, and it was gale force winds. It was scary. I mean, we're in the car, and we're just driving past Rodine School, which is right exposed on top of the cliff, and you couldn't do any more than 30. It was crazy. I mean, you can see cars are getting blown all over the road. Anyway, all of a sudden, we see this poor seagull in front of us, and the thing's trying to fly in the wind and all the rest of it. And then all of a sudden, a huge gust takes it, and it literally throws it at the car, and there's a huge thump, and the wing mirror of the car gets smashed completely. And there's and the thing is, because we're moving, and obviously the safe stuff, we couldn't stop to see what happened. So I very much suspect that the seagull was killed instantly with the impact. But it was.
There's me whinging about feeling a bit down because of the weather.
Yeah.
To be fair, that little seagull had worse times of it than I did over the weekend.
He did. I think sadly that seagull probably is no more. But it was incredible. Just literally, this poor thing's trying to fly, and the wind was so strong, it just drove it. It literally flung it into the women of the car, and there was a hell of a thump too, And I just thought then, but of course you got all the mirrors are sort of connected up with heated glass and everything else. So the glass is hanging out, the mirror is flapping away, and glass is smashing against the side of the car, so it's done a bit of damage. But at least it's just damage, but sadly the seagull is probably no more. Anyway,
it wasn't your fault, Al. In the court of law, you can easily say that was nothing to do with me. It was wind. It was the elements.
It was bad wind, yeah.
I think, if you're a religious person, I think, God wanted that seagull to go, because, if he created this weather, that was ultimately God's, doing, wasn't it, really? But there we are.
Yes, yeah.
I'm not religious, it's just weather. Right, cool, let's get to stocks then. What was the first stock, Al?
Okay, first stock is Venture Life Group, Epicode VLG. Now, I may be talking with one of the company officers a little later on today about the developments today, but I just want to basically recap and go through what Venture Life Group do. The stock has traded as high as 105 pence on the year, as low as 20p. Currently trading at just under £1, with a market cap of some 83 million. And Venture Life are what they call themselves an international consumer self-care group, and they have a large portfolio of different products for oral care, skin care, pain relief, and so on. They sell these products directly in the UK and in the Netherlands, and they have agents in over 40 other countries to distribute the products for them. They have a manufacturing and distribution hub near Milan in Italy, and they have offices in the Netherlands and UK, of course, which is the head office. The company has really done an awful lot over the past few years in terms of funding its own growth and making organic and making acquisitions to help it grow organically. And the group announced a set of interim results, which were quite a sort of landmark announcement on September 23rd. In the half year, it had grown revenues by 80% to 16.9 million. 65% of those revenues were organic, and 15% of the revenues came from PharmaSource, a company that it paid out of its own cash. It paid from cash that it had generated to buy the business at the end of last year. Gross profit was 97%, just under 7 million. Adjusted EBITDA grew 368% to 3.5 million. And the group ended the year with end of the half year with 6.5 million cash, despite the acquisition. So very strong growth, very cash generative. some of the highlights during the period included a new distribution agreement in China, and that's going to be worth some 168 million euros to the company over the next 15 years. So this is a huge marketplace, and it's and Venture Life do seem to be very well placed to progress this. They've got a very strong order book for the second half, with 8 new distribution and 11 new development agreements. And some of the brands they work with include Ultradex UK, or they distribute rather, Ultradex UK. They also manufacture for Alliance Farmers Kellercoat nail brand. Dyson Plus hand sanitizer. They sold 1 million units to Asda. And they also distribute through Boots and a raft of other high street names. And Lloyd's Pharmacy, of course, one of the key distributors for their fungal nail treatment. But during the period, the group also announced that its mouthwash brand Dentyl was going to be part of a trial undertaken at Cardiff University, and this trial basically is to test the efficacy of CPC-based or mouthwashes that contain CPC on eliminating the COVID virus. And the company announced today, this morning, that's Monday, November 16th, that the in vitro trial had established in the testing that the mouthwash eradicates SARS-CoV-2 or COVID-19 virus completely within 30 seconds of application. And there has been a lot of anecdotal research supporting the fact that mouthwash does this, but this is the first solid evidence of this. And obviously, it's a big step forward because Venture Life's own brand was used in the trial, and we will receive the full trial results on the research in early 2021, which and that research also includes a human clinical trial as well. So great progress from Venture Life Group, great forecast for the second half. And I think one important factor as well to consider is that during the period, the group's manufacturing and distribution hub in Milan in Italy maintained full operational capacity and was unaffected totally by COVID events. And of course, Milan, Italy, is northern Italy, where the COVID outbreak in Italy was. So that's quite an achievement for the group. So yeah, I mean the shares are still, as I say, they're not far off year highs now. But I think with the news on the mouthwash, we should see some further upside for the group going into 2021.
Mm-hmm. I use mouthwash now on a daily basis. I don't know why. Just I do too. Yeah. But I saw mine the other day. It says no alcohol. But I thought, oh, that's interesting, because of course, if you I don't know who's drinking it, but I mean, it shouldn't go into your system. But
I'll have a mouthwash, please.
We know alcohol kills viruses, as long as 95% plus, I think, isn't it? But I thought, well, what are they using if it's not alcohol? But anyway, very interesting. Cool. VLG, strong looking chart. What's next, Al?
Okay, so we have spoken about this company beforehand. This is a logistics and distribution group. Companies RA International, Epicode is RAI, and shares have traded as high as 72p on the year, as low as 26p, currently trading at 45p, which it very much seems to be a level for the stock over the past year, and that's despite a blip up to 60p in September. So RA International was founded by Lars and Soraya Norfelt.
Easy for you to say.
Yeah, so Lars and Soraya Norfelt, that's it, yeah. In fact, this was picked out last year by Jane Hart in the Mail on Sunday, and she described the company as a good long investment with an ethical dimension too. The company was rolled out of, well, it was, I guess you could say the Lars and Soraya both worked for the UN, and they saw the problems faced by companies and charities operating in far-flung places, and the problems and challenges they faced in bringing logistics, power, food, energy, and so on into the region. So with the contacts at the UN, they basically set the company up to facilitate and enable that. And they've had a fair degree of success since launching, but certainly over the year, in the run to the results, which were delayed, of course, due to COVID-19, they've actually had a very successful year. In April this year, they announced a 16 million contract with IAP Worldwide Services in Africa. They announced a major contract win worth $60 million over 2 years with an oil and gas client to supply integrated services to South Africa. And they were shortly after that appointed preferred contractor to Kaluli Mining, worth over $20 million over 2 years, again in Africa. The company announced a share buyback program earlier in the year, which has now been completed. But then the delayed interim results were announced in September, which made very good reading. Revenues of 35.3 million, up from 23 million for the equivalent period previously. Gross profit of $10 million from $7 million previously, and basic earnings per share of 2.9 cents, up from 1.5 cents previously, and the group ended the period with net cash of 20 million versus 25.8 million previously. But significantly, at that point, the forward order book read at some $132 million, and then increased with the contract wins to 185 million at the end of August. And Cyril and I said at that point that the company had faced some difficulties during the year with COVID, but with its cash position, with the forward order book, it had good visibility going forward and was well placed to withstand any headwind. So if we look at the historical share price performance, I think around this level, the shares do seem to offer good value. I believe there is, a dividend may well be reintroduced at some point. The intention was to pay a dividend, I think, at the outset, but that may well be introduced at some point. But this is a company that I think is filling a gap, and if you do your research on this group, I think you'll find they offer a very investable proposition.
What gap is it filling then? What's the gap there it's filling?
Sorry, the gap. What are you talking about, Justin?
You said to me this fills a very interesting gap. You said there.
Oh, I see. Yeah. Just in terms of the logistics, there is.
Oh, okay. Right, mate.
When you're operating in remote territories, Africa obviously is a vast continent, but of course, continents in Asia, Russia, and China, likewise. And of course, when you're operating in these far-flung places, you need to be able to take the logistics to the spot, and that of course includes power, food supply, energy, accommodation, and a whole raft of stuff. And of course, this is what the Nilfelts were working with in the UN, and they have literally taken their experience there, set the company up, still working with the UN on a number of projects, and rolled this into the commercial sector. And it's as Joanne Hart, I think said nicely, it's an investable proposition with an ethical dimension.
Yeah. Cool. RA International. What's the ticker there? RAI. Is it RAI? RAI.
RAI. Yeah, that's it. Yeah.
RAI. Oh yeah.
Yeah.
RAI. Cool. And what's the last one, Al? The last stock you're talking about there?
Okay, just want to bring up to date on Arca Resources. ARK is the EPIC code, and this is a tiny mining company. It's currently got a market cap of 2.8 million sterling, trading at just under a penny, and the Arca mine, of course, is the former Connemara Resources. The flagship project for the group, I think, is the Stone Park project, which is the zinc project in Limerick, and this project is 76% owned by Group 11, the TSX listed company, and Arca owned 23% of the asset. A maiden inferred resource of just over 5 million tons in lead and zinc was the findings initially. But of course, the asset which has geology and is adjacent to the Palace Green zinc project, which is owned and operated by Glencore. And what has happened during the time that the project has developed, Group 11, the TSX company, has seen Glencore gradually increasing its shareholding in the group, and Glencore now owns 26%. And I think that tells you a lot about the quality of the project, because clearly, if it's adjacent to Palace Green, it's a proven asset. Then Glencore, of course, could possibly theoretically at some point make a move for the asset, and of course that would see a good day for Arkle as well. The company announced on September the 10th that drilling had commenced at Stone Park Zinc project, and the targeted holes on the basis of research that was undertaken later on later into 2020 indicated that they were well placed to grow the existing 5 million inferred resource to a higher number, and of course. This is all underscored by the corporate interest of Glencore gradually increasing its stake in Group 11. So, interesting position there for Arkle. Two other projects owned by the group include the Mine River Gold project in Wicklow, which includes 8 licenses over a 15-kilometre target area. And of course, we've spoken on many occasions in the past about the Wicklow Gold Rush, and indeed, drilling and soil sampling has been undertaken at the project, and the soil sampling has identified 5 new rows of mineralisation. And on the back of that, the key licenses of Tom Breen and Knockala have been renewed by Arkle Resources. Arkle is, of course, run by John Teeling, who's a mining veteran with 40 years' experience, Pan-Andean, Minco, African Gold, Persian Gold, West African Diamonds, Kenmare, to name but a few. So John is well regarded and well respected in his field. There's the CFO of the group is James Finn, or Jim Finn. He's also former Pan-Andean and African Gold, again, a team with some real caliber there. The final project owned by Arkle is the Inishowen Gold Project. Sampling undertaken there. September 25th, they announced a new prospective areas to the southwest have been discovered. And again, strong gold indicators were discovered in the soil sampling there. New drill targets identified and these will be completed by the year end. And of course, drilling will start in early 2021. But I think the key asset here, and the one I think that is expected to really move the share price, is of course the Stone Park Zinc project, and it'd be interesting to see if Glencore continue to add to their holding in Group 11.
Mm-hmm. Do you know, I'm just looking at while you're talking there, I was looking at, on the ticker there, that I looked at on the markets generally. Very interesting to see the sectors that are winning today. Pretty much, you got Whitbread, which is obviously called hotels, Intercontinental Hotels, Standard Charter 250 on the 250. Cineworld's up. So the Carnival Cruises. So this is very much a rally of recovery, isn't it? These vaccines are already powering this recovery. They're thinking now we're going to see through. And I think that's the way you have to look at it. As an investor now, you've got to take positions in these beaten down sectors that could recover. And of course, they may take another couple of years to recover. But the stock market, of course, share price will recover a lot sooner than that. Because
it will. Yeah. It always looks 6 to 9 months ahead, doesn't it? So of course, it's now taking into account what could well be happening next summer. But yeah, I think the indications are that this virus is all it's said to be, and of course, not forgetting that it's not just Pfizer's virus. It's there are so many other solutions being worked on by so many other companies.
Well, I did this. I did in the video yesterday, and I said, listen, always trend is your friend. If you want to know when to buy the dip, and I did a video on buying the dip, I said make sure it's in a trend. A start of a trend, a big trend, uptrend, not a downtrend. If you're buying the dip, you keep buying the dip, you keep going down and down and down, and it simply costs you a lot of money. But I said the trend now, if you look at, I said, how do you figure out what the trend is now? I said, listen, there's going to be more vaccine news coming out. We've got Moderna pretty much next week, they reckon, or the end of this week, which is exactly the same tech as Pfizer has. So the efficacy rates are going to be quite high, apparently. Then, trouble is, with those two vaccines, you have to store them at -80. Which is a bit of a logistical nightmare, but they have these cold chain storage supply chains, which you could store them in these boxes of dry ice. So it's doable, and then they can stay for like 5 days, up to 5 days in normal freezer. So they can be done, but the cost of them is unbelievable. I was looking at 30 quid for 2 jabs. Now, the UK government's bought 40 million of those for Pfizer. Moderna's going to be the same. But then AstraZeneca, that's going to be coming out either towards the end of November. That's the game changer, because they don't have to be stored at -80. They can be stored between 2 and 8 degrees, so normal fridge pretty much. And the government's ordered 100 million of those. And early stage trials on those look very good. So I said, how do you know what to invest in or buy the dip in? I said, if your company last Monday's share price took a hit on positive vaccine news, do not buy the dip, because there'll be more positive news coming out. If your company rose last Monday on that vaccine news, then buy the dips in that company, because if they are in the leisure, health, hospitality, banks maybe, anywhere like that, then they're going to do well because they've been hammered down massively over the last 6 months. But I think in the next 6 months, they'll outperform any other sector, those sectors. So
absolutely.
That's if we get positive news. And I think you can safely say we probably will. But if we get positive news on vaccines, then I think it's those sectors are going to rally strongly.
Well, they are, and I think also we're seeing all these companies that have been working on the cures at various levels and at different stages of the cycle of the virus. They're now coming to the conclusion of their testing, their trialing, and we're going to see a raft of these. But of course, you're talking about the companies that fell off a cliff last week after the announcement. Of course, Novacyt was one of them, and then Graham Mullis, the CEO, came back in on Thursday last week and bought £500,000 of the shares, in the open market. I mean, if that isn't a bullish statement, I don't know what is. That's a really, really solid underscore.
I think Novacyt are one of the people that have done. They are the king of COVID testing, and I think every other stock that's doing COVID testing listed in the UK is rallying on that performance, on what they've done, because they've really generated plenty of cash from this. And like I said, once this COVID testing sort of dies off, and it could be around for the next 6-12 months easily, but I think if we get effective vaccines, then the need for testing will go down immeasurably. And like I said, some people say, well, you can say as a COVID testing stock, it'll be around for another 12 months testing. Yeah, but that isn't enough transparency or clarity for a business really listed. If you have that short window, then if you haven't started generating cash on testing yet, then that window is getting shorter and shorter, Whereas Novacyt is the king of testing, I know, and so it'll do well anyway. But I just think you've got to look further out. I mean, as a business, investing in a business, whether you're a trader or investor, but as an investor, you've got to have at least 2-3 years of a business plan going forward.
Absolutely, but also this virus is going to mutate, and some of the efficacy of some of the vaccines that will be released now will be ineffective probably in a year's time. So this is a moving feast. I mean, we're going to be battling this thing forevermore.
It'll be like flu, though. Yeah. Once you get the main strain under control, and pretty much you can get a decent vaccine, then you'll adopt different versions of that, iterations of that. But it's like the flu vaccine. They're only successful 40. They have efficacy rates of 40 to 60%. That's all they have, and that works fine. And over time, of course, we'll pick up sort of immunity to mutations, and some strains of flu don't affect people that much because they've had other parts of flu. It doesn't hit them so hard. So it's the initial hit by a new virus is the problem. But I'm just saying over time, don't bet against human ingenuity. It'll be here for a while, but. Did you see that the government are going to spend 42 billion on testing, right? And that is 3 times as much was spent on English police force in 2018-19 year, which is nuts. But if you look at that, I read the FT article, if you look at the bottom there, I can see most of that money going to contracts they've already paid for already. There's a lot of companies there. I didn't realise how competitive the testing space was. If you go to the bottom of the article, they've got a list of companies there already being paid massively by the NHS. And I think it's a lot easier just to keep doing deals with those companies. They know the quality is there, rather than to find new companies. So it's a lot of money, but it's a very competitive space. So these big companies in America and China seem to be taking a big chunk of the revenue, and Novacyt as well. But to me, as an investor, there's not enough runway, to invest in those companies now.
I missed
out.
Yeah.
I should have been there in the clever money started piling in February, March time. That was when or the fast money. That was when they.
Well, I think we said. I think we said last week with Novacyt. I think 4,500 stuck in at the start of the year would have yielded. Would have taken you on the price last week. You'd have had £500,000. So that's what a fantastic return on investment that would have been. But and that's why we love the stock market, though, isn't it? That's that's the opportunity, and always the possibility somewhere that you might just get something right, and that's a great thing. But of course, we heard today an arthritis drug apparently is also good for mitigating some of the worst symptoms of COVID too. So we're going to find as we go on that a lot of the drugs already in circulation are applicable and do have an effect. So as you say, rather than sort of start from scratch, these are in the market, they work, let's use those. That's how it's going to work.
Marvellous stuff. Cheers, Al, and we'll speak you next week.
Cheers, Just. Speak you next week.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Novacyt, down 11.7% to 782. At 4, Alien Metals, 1.375, non-mover. At 3, Open Orphan, down 11% to 23.5. At 2, Omega Diagnostics, up 8% to 60.5. And at 1, Remote Monitor Systems, which I've just learned is close to 100 million market cap at the moment. Up it was 20%, it's up 1% now to 5 pence, just over 5 pence. All right, top 5 most liked RNSs are as follows. At 5, Phoenix Copper Limited, Red Star update. At 4, Symphony Environmental, it's a new product launch. At 3, Iconic Labs, of course, John on the podcast, and that was a new management contract with Love Media. At 2, Omega Diagnostics Holding in Company. Who is that? Richard Sneller is out, apparently. And at 1, Deep Verge, and that's an update on detection products, down 3%, 21.75. Let's just check quickly what are the most read RNSs. Bear with me. That is, no surprise, probably Novacyt. R&D update, yeah. But below that is Omega Diagnostics and Remote Monitor Systems and Deep Verge. Okay, check those lists out at voxmarkets.co.uk. Thanks for listening. Muchos appreciated.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.